Okay, session's being recorded. This is a free session for three of my best members from a long time ago. Amar, Mark Bader, I have Casey Novak, and I have Just Common, Scott Merbet. Today is October 7th, I believe, right? October 7th.
Yes.
And just a reminder, we as traders, we do not get Columbus Day weekend off, which is fine because we respect it. And I'm sure Mr. Columbus would be a Clueless 8 subscriber if he was around this time. And yeah, and he would know how to navigate the volatile seas. Yeah, that's the best way to put it. Yes, exactly. And and this is purely for financial education, not for any solicitation or what's the word I use for disclosure? Financial solicitation or advice. Okay, that's great. So I want to show you guys a couple of things that I'm watching very, very, very carefully. One of the things you all of you realize that I'm not pushing trades that hard. I realize the market's overbought. I realize that that there are technicals which are very mixed. I also realize that there are, you know, the standard stuff that we follow, stochastics and everything are really flying off the roof. So saying all that, I have to respect something that I have seen over the years. So when the market gets back its animal spirits, and let me explain to you what that means. I know you guys might have heard that term, animal spirits, and,
Yeah.
and I'm not talking to you when all of you guys are married men, you know, when your wife says, "Hi, honey, you look pretty good," you know. But I'm talking about animal spirits in the market when confidence comes back. This is something which is part of the behavioral game theory. I've seen it happen so many times, as recently as last October, as recently as when we bottomed here, as you can see from the screen, back around the end of September. Um, and the bottom line is when animal spirits come back in the market, all of a sudden the big money decides that it's time to rock and roll. All right. And that is the most difficult part of my business because I'm a pretty disciplined guy when it comes to markets. And what happens is I have to guide. Um, you know, we have about 200 plus members. Not everyone's in the chat room. Not everyone is on the Twitter feed because a lot of them, maybe like, you know, 60, 70 of them are just following my videocasts. They are following my end of the day reports and things like that. And for whatever reason, you know, they don't want to get, you know, real time alerts, whatever. So I have a what's the word I'm looking for? I have a responsibility in a small way, even though I don't have a financial responsibility. In other words, a fiduciary responsibility. And Mark, you know, in other words, I'm not responsible for anyone else's trade, but at the same time, I have to do what I think is good for other people. You know, I'm just, you know, just being clear about that because there's a lot of legal stuff that happens with guiding people too closely in and out between trades. You know, all of a sudden somebody loses money. Obviously, you know, with the markets the way they are, and they will be and have always have been, and then all of a sudden it's just like, oh yeah, I know he told me to, like, you know, do this and that, and obviously, you know, I don't want to get into that headache. That's one of the reasons why I left Wall Street, to be honest with you, because I knew in my own self what I believed in and what I thought was the best for the people. But when you start taking responsibility of OTM, which stands for other people's money, it becomes a real headache. So anyway, so aside from that, let's talk about a few things that I'm watching here very closely. So take a very close look at this chart here. And now, if you're not using Thinkorswim, then obviously it becomes a little bit more difficult to understand this, but let me just show it. So I drew these channels the other day. These channels have worked for me for a while over the years, and channels are important because if you draw it the right way, I have found out that they actually hit those levels. And just like all of you, we're always scared about when we're dealing with real money. Notice one thing about when I do about my trades these days. I am always on a big surge up, big move up in the market. I am selling like my standard line 80% of my gains, whether they be 60% or if it's a swing trade like 150%, whatever. Are you guys there?
Yes.
Okay. So the bottom line is because I'm also being cautious because the way I look at it, if that type of money is being made in these difficult markets, then I see no reason not to take them off the table. Now, what is the problem with that? The problem with that is that when the markets turn around and go up like 100 and some points, okay, so I'm leaving about 4 or 5 S&P points on the table after making 4 or 5 along the way. Now, I'm not going to disclose my trades, but let's say I do more than one contract, which I do, okay? I'm not doing 20 in this type of market, which I should actually, but I don't. So let's say I buy 8. I love my number 8. And I'm not even Chinese. So the point is, yeah. So the point is that I do, let's say I do 5 or 6, which is generally my, standard thing. And I buy them at 11. And they're at 16. So I have $3,000 just waiting for me to take off the table. That's better than frigging gambling on a nice table in Vegas. Actually, maybe not if I was hanging out with you guys, but or my brother-in-law, who's a big Vegas guy. He's actually a big financial guy up in Canada. And the point is that I'll say, wow, that's great. So let me take down like 2,500 of that down. You know what I'm saying? Over a 20-minute period. I mean, come on. That's great. So the point is that we're leaving a bunch of stuff on the table. And it's okay. It doesn't feel good because if I left, what if I took one contract down, and left 5 on the table? Wow. Then it's like 7 points, or 8 points. And I'm just like, so I'm also going through the same stuff that you guys are going through, but I'm just saying, like, cautiousness is not paying the bills on a runaway market. So let's try to, do you guys understand what I'm saying? Amar, you understand?
Yes, yes.
Yeah. So what I'm saying is that greed is one thing and putting money in the bank is another, but at the same time, we are leaving a couple of thousand on the table. And if you're doing smaller amounts, a couple of hundred on the table, and we are just like, whoa, it's, so this market is designed to really screw people. I'm telling you right now. I'm really telling you, I mean, God honest truth, what I go through every day, what I try to put through to you guys. These machines are unbelievably manipulated, and they know exactly what the traders are putting in their trades. One of the simplest reasons that I can think of why the market's going higher is simply because there are so many shorts in the market, or were so many shorts in the market, that that they are just they just want to pay them. I mean, why should the market keep on going down, another 3,000 points, 2,000 points, regardless of the technicals and all that stuff? Because somebody has to pay them for their shorts, yes?
Mm-hmm.
Yeah.
Yeah, I want you guys to understand the behavioral methodology behind this. So why should they pay them? So they're like, okay, let's ramp the market up and do it. Have things fundamentally changed in the business? No. Global growth is still slow. There are still a lot of dangers out there. But maybe the markets are looking out 6, 9 months forward and saying things are a little bit better. That's a fundamental viewpoint. We don't know what the fundamental viewpoint is, because what the market is doing, it's manipulating and working towards what the short-term viewpoint is. And that is the hardest part of my job as a trader, as an investor. Listen, buying into Juno, and let me just put that up here for 1 second, and saying, okay, a year down the road, these guys, which were voted by some of the best minds in the business as one of the best companies out there on the cancer therapy situation, is going to be a $70 stock. Or it hasn't even been around for that long. I can't even draw a chart like, which was, let's say, a $90 stock. This is a weekly chart since it started. Juno started here, by the way. Okay. Let me go back 5 years. It hasn't even been 5 years. Guess what? The chart doesn't even go back 5 years. Okay. So it doesn't even go back 3 years. It goes back 1 year. So those are different stories. Yeah, here's a 1 year chart. So looking at this chart, wow, this is fantastic. My lines are as accurate as you can get. So that's a different story. That's a investment. And 1 second. 55. I mean, looking at this pattern, even if it pulls back here a little bit, so what? We're looking at 55. And if it enters the channel, guys, you're talking about 65. Forget about what drug delivery and what they're bringing out and stuff. As long as the company doesn't screw up on a royal level. Keep in mind one very important thing here. I'm very hard on this stock. I have a lot of stock, by the way, from these levels, okay? And this level. So, and I have these options which go out, some short term, some long term. And those options I trade around. But the stock I don't touch. So the point is that, let me just put it this way. If you had a Goldman Sachs advisor who charged you $100,000 a year and told you that you would be basically having a triple on your money in about, and this applies to Kerry as a doctor, and here's a cancer therapy company which they believe is going to be the next Regeneron. Now, this chart doesn't even show it. Regeneron, you're talking about way past 100. And guess what? He kept on showing you some reasonable performance. You know what? Trust me when I tell you, you'd be keeping on going with him. So here you're getting this stuff almost for free for, for just being on the phone. So this is an investment. That's a different story. And so that's this is looking really, really good. I mean, yes, it's going to hit resistance at 50. And then it might pull back to about 45. So what? It is going to go to 55. Just based on what the chart patterns are telling me. This is a classic here. 43. Great. No problem. My hands just moved. 55. Is it going to happen on some big news? No. It's just going to happen from nowhere. Keep in mind that the stock was up 10% on a day that the biotechs were getting killed. I repeat, it was up 10% on a day that the biotechs were getting killed. So what's happening? What's happening is some smart money is buying the stock in a big way. So this is, it's like one of my favorites. And I'm not a biotech specialist. I'm just simply saying that it is doing what it is doing. And looking at the pattern, it is, it's obviously not a stock that's overvalued. So that's it. Now, let's go back to the reality of what we do on a day-to-day basis. Let's take a look at the SPY. So, here we are. So everyone basically freaked out when the markets collapsed. I did too. I have to. I mean, this collapse is not a joke. But I didn't freak out here. We were buying here. And then we had this massive, massive red candle, which is a bearish reversal, which shows that the market should go down here. But it didn't. The next day, it opened up a little bit, tested close to the bottom, not that close, and then created a massive reversal candle. On this 30-minute thing that I'm doing with you guys for free, I'm just explaining. I'm going to ask you a direct question. Do you see what I'm saying,
Yes.
Amar?
Yes. Yep.
Okay. When you see a candle like that, like we say in New York, don't fuck around with it. Please, don't do it. Please, it's almost like going against some Brooklyn gangster and saying, I'm going to take you down. And he's going to be like, yeah, right. Like you're going to get shot. So when you see a candle like that, and I was there. And I know I said that in my comments if I brought it out. I'm not, all my stuff is archived and I don't feel like going out there and bringing up my comments, but this is big. So next day what happens? We make another big move. And then as people start getting excited here, they should be getting excited at these levels. And I was there. They should be looking at this level. And I was there. And why was the reason why I was there? Because of this. I said very clearly that when you have a bullish, you have a bearish engulfing, yet at the same time, it wasn't that bearish engulfing to be at the bottom. That's number one. And number two, look what was going on. And this you could apply to anything, stocks, whatever. Look what was going on with the stochastics. They were going higher. Yes?
Yeah.
There you go. So you stick with the trade. So even though we had the complete reversal and CNBC is like, oh my God, it's all over. We had one day the move up from the flash crash. This was the flash crash. And then, this and that. You had to watch this. Discipline is a very hard thing. It's like me going to the gym. I've said that before. And one day you'll see my, see my face and stuff, and I'm in my late 40s and I look pretty damn good. Because everyone who sees me, they think I'm in my 30s. That's great, because my wife looks like she's in my 20s. She's in her 20s, so, what do I care? All right? All I pray to God every day is that my son gets into Columbia or Princeton or Carnegie Mellon or UPenn, okay? And that's all I care about, okay? He doesn't want to go as far as Caltech. Kerry knows what I'm talking about. But
Yeah.
you know what? Maybe he's not as smart, he's not... I just want him around. So, I mean, come on, that's it. I want my kid. I want to see my kid. That's the way I look at it. So, so the point is that this is key. This is key. All right. So this definitely worked out. This definitely worked out. And then we had this jostle, this big duel, where the markets can move sideways right here. Okay. So guess what happened along the way? We had this big fallout. This shook a lot of people out. This shook me out of quite a few positions here and there. But then I reacted quickly when I saw what was happening with these, let me just highlight, with coming down here with the lower Bollinger and stuff. So let's talk about what's happening right now. So let me draw this line directly in front of you. What I'm doing here, and you can do this yourself, what I'm doing here is I am trying to join as many points as possible. And I'm very meticulous about that. Can you guys see this?
Yep.
Yeah.
Okay, good. So I joined this point. I joined this point, and I'm going to duplicate the drawing and put it like this. Because the bottom line is already, this is one of the things. And remember, I'm a technical analyst, but I am not a traditional, like, you know, I just have to draw in all 3 points at the bottom type of crap, okay? So I am more concerned with where we're going, and not as concerned where we came from. And this, some big shots have said that. Always be concerned about, we'll cover the technicals in a second. Always be concerned about where you're going, not where you came from. And you hear this from like some, you know, very traditional big shot guys who, with all due respect, are very knowledgeable but quite wrong about the markets that we're in right now. All right? Are you guys with me?
Yep.
Yep.
Okay. So let's see where we're going. So where we're going is this. Where we're going is 205 on the spies. Let me make this a little bit simpler because we talk about the S&P all the time, correct?
Mm-hmm.
Right.
You know, I never thought we would have a day where I would share my internal charts with people. I swear to God. You know, I mean, the service started off, I shouldn't say it's a joke. It started off like I would just show my charts end of the day and this and that. But wow, it's taking a life of its own. So I'm going to, this is a somewhat of a bear flag. You know what I'm saying?
Mm-hmm.
It's not as much of a bear flag. So let me do this. Let me move.
Looks more like an ascending wedge.
Uh,
Or did.
Ascending triangle. 1 second. So I'm going to do this. Now, I used to draw these lines when I didn't know what the hell technical analysis was, and they were so right all the time. I said, excuse my French, I said, fuck it, man, follow the shit that you draw, you know?
Yeah.
I'm serious. I mean, I'm not kidding. I don't even follow all the stuff that I draw. I mean, I get like a lot of the profits in the middle. I mean, I should really start believing in my old crap, you know? But I'm serious because you know what? The people who believed in it, they have done performance-wise, maybe not money-wise, but performance-wise, far better than I have. There are guys who have taken like $5,000 and turned it into 200 because they just believed in every single thing that I did. But as somebody who is producing the content, right? I'm always very skeptical about my own work. You know what I'm saying?
Yeah.
This happens to, this happens to a lot of people. I mean, this happens to writers, this happens to producers, I mean, you name it. I mean, whatever. So yeah, I'm not complaining. I'm just saying I should. So looking at this channel, Mark, you're with us? Amar?
Yes.
Okay,
Yes.
good. So
Yes, I'm here.
look at this very carefully, because I'm kind of leaning forward to my screens, which is kind of stupid. But I'm only like 3 feet away. But so the upper end of the channel on the S&P is 2026, right there. I can assure you, one way or the other, within the next, before the middle of the month, in my opinion, this is a daily, right? This is a daily of the S&P 500. We are engaging the 50-day moving average. You see this red line, right?
Mm-hmm.
Right.
That is a massive wall for no other reasons, gentlemen, other than the fact that it's a psychological wall. The 50-day moving average really means nothing in the scheme of technical analysis. But because everybody talks about it, 1 second, Let me make this yellow. Let me make this green. There. Do you see this line?
Yeah.
This was a line we completely gave up. This was the massive inverted hammer reversal. Okay? At 2021. So let me get my little $5 calculator out. This is with me for the last 10 years. So to me, it's a precious thing, right? It still works. So seriously,
That was Fed. I think that was Fed Day, wasn't it? When Janet Yellen.
I think Fed Day was this, if I'm correct. No, it might have
Yeah.
been this. What day was Fed Day?
Yeah, that was the high.
No, hold
That was
on.
the
Yeah.
high.
When was the Fed Day? Fed meeting. That's a very good point because I'm losing track of time. So Fed meeting, September, right?
Yeah.
Okay, let me see. I'm just typing it into my other screen. Hold on. Okay.
Yeah, that was the most recent high since the collapse, the flash crash.
1 second. September. Oh, September 6th, 17th, and 16th. So right here, right? Right
Yeah.
there. You guys were right.
Fed Day.
Yes. I'm losing track. Sorry. So the point is that this was that big reversal, which I couldn't read right. I'll be the first one to admit. I reacted after that, but I couldn't read right because it was an inverted hammer, but it wasn't a bearish engulfing. You know what I'm saying? It didn't take out this low. Get it?
Hmm.
So I said, let's stay long for that. And then came everything else. So given where we were at that time, and this was also the big, massive, ugly breakdown back on August 24th, right?
Yeah.
Right there. And not August 24th. What am I talking about? This was the week before August. Day before August 22nd or so. Let me just see. What day was this? This was August 21st. I'm sorry. August 21st. So given the pattern symmetry and all that bullish, dragon bullish and all that stuff, this is what we are following. We are going to get up here. So my point is very simple. From 1995 to 2023, let's round off the numbers, right? We closed at let's say we closed at 1996, just rounding off the decimals. So we are talking about how many points? 26, correct? Guys, I don't need you to be in the same page with me. We're talking about 26 Dow points from here, right? Where we closed at?
Correct.
Okay. So 26 Dow points multiplied by 8 or 7, let's say by 8, is 208. I'm sorry, 26 S&P points is equal to 208 Dow points. Gentlemen, we are going there. We're going there. So the point is, if you want to make a calculated bet, not a tactical bet, just a calculated bet, throw out by the end of October. By the end of October, I have to figure this out. Either it's going to be this week, I doubt it. I don't think we get 200 points tomorrow. But by the end of uh, October, we are getting up to about 2023 on the S&P. So any pullbacks that we get, right now we're getting a pullback. S&P futures are down about 8.5 points. We're going to go into that channel in a second. And excuse me for 1 second because I do have to go take a pee, all right? So, yeah, I'm dead
Okay.
serious. Yeah, hold on 1 second. It's the wine. Hold on.
I'm gonna go get some more wine.
Okay, I'm back. You there?
Yes.
I love this new heavy-duty microphone that I got. It looks like a I'm actually going to put a picture of that on Twitter. You know, it looks like one of those old-fashioned microphones. You know, maybe that Lou Reed used to
From
use. You know what I'm saying?
radio station or something.
Yeah, yeah. It's like, you know, the one that I can actually unclasp and like sing karaoke or something, or like, you know, sing like some of Lou Reed's songs and stuff like that. But Amar, you there with us? Mark, you there?
Yes, cool. I'm here.
Okay, okay. So let's get straight to the
Yes.
point. Let's get straight. We go right after this. We go into the channels and we're going to look at a couple of stocks which I think are going to really do well. So anyway, so the thing is that that we are going to somehow get there. Now, before we get there, this is what I think is going to happen, and this is what I think is happening now as we speak. And these things, whenever I've said it, have come right. The first lot, this block is fantastic. Doesn't mean we're going to create another block. We will basically, what we'll do tomorrow, Thursday, is we are going to give back maybe half the gains we got today. Okay, so we're talking about 50 points roughly. All right, so we're going to give back half this fat green candle. Let's say we give back all of it. And I'm going to be reacting to it, but I'm just saying, no, let's say we give back all of it. Nothing to fear. Next thing is the best scenario that you can think of from a bullish standpoint. And I know some of you know the answer. We have to come and test the downtrend line, 1960. Get it? Right here, 1960 S&P. So if that happens and we give back 35 points, we're talking about a 260 to 280 point drop on the Dow. All of a sudden, everyone freaks out. Guess what happens by that time? This is a daily chart. We're going to reset nicely. Not down here to zero. Let me actually get this out so I can show you guys. You know, things I've learned. So we're quite overbought. We're looking really good. Everyone's happy. Well, let's take some of the happiness out. So we're going to basically come down and test the 60 or 50 level on the stochastics. All right. By that time, this one will come down to about 1967. Let's say we test the downtrend line or even the bottom of the channel. You guys with me?
Yeah.
Right. That's the reason why I don't push heavy long trades right now. Just so you understand. Because I don't want to be in a position where futures are down about 9 points and probably by the morning down about 12 points. And I'm like, oh my God, I have like, you know, whatever, like 10 S&P calls at 11 and they're down to 5. I'm down like 5 grand right off the bat in the morning on one trade. It's no good. It's happened to me many times before, but still. So bottom line is we come down to the bottom of the channel, let's say the 1950 level or the 1960 level right here. Perfect. By that time, we will have given back on the stochastics somewhere in the middle, between 60 and 50. You guys follow me on that?
Mm-hmm.
Yeah.
Rule number one, for some weird reason, and I've been doing this for a while, so I know, a Fibonacci 50% retracement almost is like standard, both on the upside or downside. In other words, if you get up a lot, you're going to give back 50% of that. It doesn't mean 50% of your gains. I'm just saying 50% of the pullback. So if that's the case, we're almost at 100. Let's call this 100. So you're talking about from 0, which was the ultimate buy, up to 100. So we're going to come down to 50. So coming down to 50 means we're coming down to about 1950 on the S&P 500. So let's say that happens by Friday. Let's say it happens by tomorrow. That's perfect. Given where we stand from a technical standpoint, we should have a bounce at that point up here. In other words, we are channel surfing. You understand what I'm saying?
Yeah.
We are channel surfing. Is it always that easy while it's happening? No. Does it happen a lot? Yes. A lot. So the point is, if we get a move up on the market all the way up to 2025, in fact, it's about 2030 on the S&P 500, which basically correlates with this move here. Correlates with, let me get that drawing tool. Okay, hold on. It correlates with that move here. Okay? That, in my opinion, if we are in a bear market or an intermediate downtrend, this will be the highest we go. Do you guys hear me what I'm saying?
Yeah.
Yes, sir.
Okay, that's good. So that's good. So if we break out of this, all hell breaks loose. I'm telling you guys, all hell breaks loose. Even the bears are like, holy shit, this market's like, at that point, we're going to 2104. No question about it. Now, what does that mean to our stocks, which we're going to cover in a few minutes? It means our stocks really go nuts. It means Apple goes to 120. It means Priceline goes to 1350. It means Amazon goes to 500. It means Goldman Sachs goes to 190. Because it's all correlated. It's all mathematical. Let me make sure. Yeah, Amazon goes to, what am I saying? It's at 542. Amazon, it means Amazon goes to 600. All kinds of stuff. I think Amazon still goes to 600, honestly. Good, bad, or ugly market. Simple reason. I spent way too much money over the last 2 months on Amazon. In between the cat food, the dog food, the electronics, forget it. Okay? So they're definitely making a shitload of money, not just on their sales on retail, but also on their Amazon Web Services, which I talked to Scott earlier, which you guys know. Mark, you know what Amazon's biggest business is?
Right. You actually told me that it's the data that they save.
Yes, it's exactly. It's the web services, the hosting services, right? Like I
Right.
pay $300+ a month to host my website, one of my expenses, on something called SiteGround. It's a big web hosting service. In fact, I should switch it to Amazon if you ask me. Maybe they'll give me free dog food. I'm serious. Maybe they'll charge me $100 or more, but I'm telling you, like, $300 more for all the pet food. So I'm dead serious. So SiteGround is actually a European company, very smooth. If you notice, the website is much faster and stuff, right?
Yeah.
And because I have so many charts and everything in there, the content gets heavy. It's called a dedicated server. So Amazon, what is the world's largest? Scott knows the answer. But what is the world's largest company? I mean, company that stores the highest amount of data? What do you think? What are the two companies that stores the highest amount of data that everyone is posting?
Facebook.
Thank you. Thank you. So Facebook's biggest hosting server is AWS, Amazon Web Server.
Ah.
Yeah, so think about it. They are making shitloads of money over over huge volume. It
Yeah.
makes, it's Facebook and Twitter. Somebody has to store the data, right?
Right.
Yeah, so there you go. And so the point is that till we get to 2,000 members, I'm probably not going to move to Amazon. But I'm still going to find out tomorrow morning. I'm going to make a call to them to find out what they charge for putting 200+ members on there, But seriously, it's not a joke. So Amazon's retail business is flourishing. They don't make money off that. They actually lose money on that because they give such amazing prices. But the web service is a huge recurring revenue. Anyway, we're going to cover that in a second. So at the bottom line is that we are somehow going to get there. In the meantime, we will most probably, isn't it amazing? Like every time I'm talking to you guys, the S&P future is down 8. What's with this 8 frigging number? So I'm serious. I'm tired of it. So even we can come down to 1970. Whichever the case, you can do some tactical shorts to get 10, 15 points on your S&P things, which, by the way, has been extremely profitable to me. Even though when I get into my first trade, I'll be honest with you, I'm down about 2 points in the first 15 minutes. I'm talking about the SPX trades, okay? And it doesn't really bother me as long as the trend's in the right place. And then if I think that we're going to go higher or lower, what I do is I'll go ahead and dollar cost average down. I don't need this actually. Hold on. And then before you guys know it, it's up 15 or 16 bucks. I've shown it repeatedly. In fact, I put some screenshots out there on Twitter feed. Amar, did you get a chance to see those?
Yes, I did.
Yeah.
Yes.
So those are real trades. All I do is I take out the number of contracts I'm buying. That's why you see a block there. You know what I'm saying?
Yeah, we really want to know how many.
But why? You're not married to me. You know?
I did see it today. I think you would.
If you are as gorgeous as my wife, okay.
You know that big white
We
block?
just want to
they're blocking
we
out
just
how
want to
many
report it
contracts.
And if
to
I
the IRS.
and if I join the LGBT crowd, I mean, maybe it's a different story, right? But aside
It's
from
easier
that,
to get into college.
yeah, what was that?
It's easier to get into college.
Yeah, exactly, right?
No kidding.
So I'm not having a gender operation, okay? I'm fine as a male, okay? And so, you know, I would love to do that because some days it's horrendously good. And in most days, it's sometimes like, you know, okay, this and that. But honestly, I don't want to do that because it's going to do two things. It's going to bring out the greed in people, which I love. But then at the same time, it's going to depress a lot of people, okay? Because sometimes I don't even do that much and it goes nuts. So, you know, what can I say? You know, you can do reasonably moderate to small, you know. I mean, let me just give you a hint. On my craziest days, and it hasn't been recently, but in the craziest day, I bought 20 at 8 and sold them at 30.
Wow.
I am not kidding.
Nice profit.
Beyond nice. Nice is a simple term to use, you know.
Steak dinner.
With steak dinner, you can buy the frigging restaurant, okay? It's like a Saudi Arab sheik saying, "Hey, I'm walking in, I'm taking the whole over the Ritz," okay? No, seriously. I mean, it's happened, and that's when I've really like said, you know what? I mean, I get that animal spirits. You know what I'm saying? I'm like, okay, this is going, and a lot of the animal spirits these days are dampened, and I'll be honest with you, primarily because of volatility. You know, my predictions have been right and I called some really good shots. But why am I not buying 20 or 30 contract? It's that fear thing that we keep on talking about, right?
Mm-hmm.
Exactly. You know, 20 contracts at 6, so you put 12 grand down. You know it's going to go up like, you know, 30, 40 points. So you put in 20. So, my God, that's 40,000 just in 24 hours. I mean, is it possible? It's always possible. But why is it difficult? Because we are being, literally, we are being walked on the volatility trail. That's why. So instead, I'll do 6, I'll do 8, and hey, I'm keeping up with my goal for the day. You know what I'm saying? So, but am I missing some frigging out of control trades? Yes. I'll be the first one to admit that. And in the meantime, I don't miss the out of control trades on FCX or Twitter, but I'm not putting like 20 or 30K in there. I'll put 4, 6 in the Twitter and the thing in. Before I know it, they're up like friggin' 300%. I mean, you saw what happened to FCX. I almost sold out of it. I sold a bunch of it. I bought it at 30 cents. They went to 19 cents. So I sold about 30% out. And then I rebought back when I started to see it moving up. Those 30-cent calls, Mr. Bader, because he loves this crap, okay, went to $1.40. $1.40. So do simple math. Let's say you bought 200 calls at 30 cents. So you have a $6,000 outlay, which for FCX, given the fact it's rising from the bottom, and we're going to cover these in a few minutes, okay? This is the best session you will have for free, okay? I'm telling you. So 6,000. So all right, 6,000. You're like, oh my God, the 6,000 goes to 4. You're like, oh shit, I'm going to shit in my pants. Calm down, calm down, okay? So calm down. So now you have 200 contracts. You are looking at it at a $1.30. Forget $1.40. At a $1.30. You look 1 second. So you got 200 calls, which is basically controlling 20,000 shares, right? At a $1.30. $26,000, gentlemen. You think the algos give a shit whether you're up 20 grand or whether you're down 20 grand? No, gentlemen, they are not. All they are giving a shit that FCX was up 5% yesterday and was up another 8 or 9% today, or 10%. And of course, Carl Icahn is a player in that. But on top of that, it's just general move on FCX. We're going to look at the charts in a second. So all of a sudden, you're up 20 trades. So let's say you did not buy 200 contracts. Let's say you bought 50 contracts, right? Are you, are you guys with me, Amar?
Yeah.
Right?
Yes.
Okay. So
Yep.
this is real trade management. So 50 contracts. That's basically controlling 5,000 shares. So you buy 50 contracts at 30 cents. You're putting down $1,500. Let me just face facts. If you lose $1,500, yes, it's going to make you feel like crap, but it's not going to put you on the street. Yes?
Right.
So, good. So you put $1,500 at risk. At risk. It's like a wild night. You know, you're there, you're not a gambler, but you're in Vegas. You're going to take the chopper down to the canyon the next morning. The kid's excited. The wife loves the dinner at Bobby Flay's or, you know, Wolfgang Puck's, you know. I mean, I'm talking about my real experience, all right, which is like experiencing the fun stuff. You're looking at some, you know, rich, really uber wealthy Chinese, Dubai guys, you know, Amar. I'm just kidding, but you know, guys like hanging out there on the tables. You're like, fuck it, I'm just gonna throw like a $50 into the slot machine and see if I can win, and then you lose all 50. Fine, you go home, fine. So $1,500 right there. So then those 50 contracts, you wake up because you're following the technicals, you're looking at some, you know, clueless 8 charts, whatever, and you say, like, I like this, okay? So that's $5,000 right now. As of this afternoon, is 1,500 is 7,000. Yeah, because they went to a $1.40, or if it's $1.30, it's 6,500. So you're like, holy shit! I just scored. Now you didn't score because you just went to there, went and sat with the Chinese gamblers in Atlantic City or Vegas. You did it because it's what FCX was showing. That's what I'm getting at. And same thing with Twitter. You think Twitter went up because Prince bin Talal, the really smart investor, put money in? No, Twitter, technically, I showed about 3 days ago, was going up to 30 plus, right? And it's still going up. Look,
Right.
I'm looking at it very simply. I'm doing periscopes. I'm doing all this shit on Twitter, right? Here's the problem with Twitter. If Twitter sent me an email, listen to this very carefully. Mark, you listening? Mark,
Yes.
okay, listen to this.
Yes.
So let's say Twitter sends me an email tomorrow morning and says, hey, Frank, let's say, you've been doing great on your Twitter service for free for the past year. I'm going to charge you $10 to shoot out all your tweets like you do right now. What do you think I'm going to say? No? I'm going to say, of course, no problem. So if they charge me $10 and they have almost 200 million customers, right? That's
Sure.
$2 billion under Twitter's bottom line for doing nothing but by sending an email. My friends, the stock is going to be at 50 in 1 week, in 5 days. In 3 days. That's what I'm getting at. These companies have major digital leverage. Do you understand what I'm saying?
Mhm.
Yeah.
Now, let me ask you a question. And listen to this seriously, okay? What if Twitter comes to all my subscribers, and I'm a small fry in the game, 200 plus people, 126 or so showing on the Twitter feed, but others getting it. So they say, hey guys, I'm going to charge you $1 to get all these tweets. And for mobile notifications on Twitter, I'm going to charge you another $2 a month. Are you guys going to say no, given the fact that you're getting my content, which is pretty frigging good, okay, overall, on Twitter? You're going to say, no problem, that's fine. Charge me $2 a month. That's $24 a month. You know, I mean, come on. I spend that on a bad bad candy or something. Well, don't eat candy. I gave up on sugar years ago. So the point is that multiply that by 500 million. You got another $1 billion from the consumers of Twitter. Yes?
Mhm.
Yeah.
Like that. So this, by the way, this is how the big shots. This is Wall Street in its best way. Simple presentation. So now you have 2 billion from the people who are creating the content, me, who has to fork out, like say $10 a month, right? And you have to fork out $1 or $2 a month. You think Mr. Dorsey, who looks like a frigging, don't take me the wrong way, okay? He needs to shave, or else ICE is going to recruit him. I mean, the guy looks like,
granola.
I mean, the guy is so granola hybrid Brooklyn, like, like out of control, really, I mean, that's $3 billion that he can get with 2 emails, one to you guys and one to me. Do you understand what I'm saying?
Yep.
Mhm.
Yep.
End of story. So that's what I'm getting. That's what I'm getting at. So you think the prince is stupid? No, he knows this shit. And changing all the characters and the stuff doesn't matter. It's monetizing the business. Get it?
Yep.
Monetizing. It's like me. I have 21,000, God knows, like 300 followers, something like that on Twitter, on SockTwits, right?
Yeah.
As the word is getting around, if I can get I have roughly little less than 1% of the followers, okay? Imagine if the word really got to them what the heck I do in here, including this great conversation I'm having with 3 of my favorite guys, all right? And I get, let's say, 10% of the followers. That's 2,100 people, right?
Yeah. It's big.
It's huge. But you think I'm that concerned about the hugeness? Yes, that's friggin' great. What you guys are going to miss out if I have 2,100 followers, we're not having this personal conversation. No, I'm just kidding. In
Right.
fact,
Exactly.
you guys will have more personal conversations because you guys were at the beginning of something big. I'm not a small fry. My trading book does great. I'm not complaining. I'm grateful for everything to God. I'm grateful to America. I'm grateful to everything, okay? So, but the point is that with 2,100 followers, I won't be able to give people individual attention, correct?
Mhm.
So that's what Twitter is going to do. Because they have to monetize the situation. They have something like something crazy, right? I think like 500 million, like 2 billion people, right? Huge. I mean, revolutions were started with Twitter feeds. In Tunisia, the Arab awakening and all that stuff, right?
Right.
Right. Mark, you with us?
Yes, yes, I'm here.
Yeah. So what I'm saying,
Yes.
if world revolutions were started by Twitter feed, they're not going to charge them like, oh, give me $1, because these guys, these guys are real, like, humanitarians. I God bless them. They are. So the point is, they're rich enough to be humanitarians. I'm a hardcore Ayn Rand guy. When you're that rich, when you're that wealthy, you can give away a lot. Okay. So, but charity begins at home. So let me put my kid through college first, and I'll be like, worrying about like giving away half my fortune. I don't even have a fortune. So the point is that um, that's what happens. So monetization is key. Is key. See, Apple, the reason the stock doesn't move that much, because they have monetized almost all their user base in the form of people migrating to Apple like me, spending about $100 already or $200 on apps, and that's just me. They've already monetized. You understand what the word monetize means, Mark?
Yes.
Yeah.
Yeah, I'm with you, Paul.
It simply means that when people are subscribing to you, you want to get money out of them. Simple. So the point is, if Twitter monetizes and Google can monetize YouTube, I put up all my VideoCasts. Like this one's going to go up because it's a free one. I want people to listen to it because it's so critical. On YouTube, are they charging me $10 a month? No. What if they charge me $10 a month for every YouTube video? They're not going to get as much money as Twitter feed because I post quite a bit, but they're going to make a lot of money. So the biggest problem with Google is they haven't been able to monetize YouTube. So that's what I'm getting at. All right. So monetization is key. In other words, translating your work into money. So let's move on. So now you know the Twitter potential, guys. All right. They can make, I just gave you a monetization plan. I'm sure they're discussing in the fancy boardrooms out there. Charge Frank to say $10 a month for putting his Twitter feed. I hope Jack Dorsey is not like listening to this frigging broadcast, right? I should actually send it to it. I should actually send it to him. He'll make me the honorary Twitter feed. But and charge Mark Bader, Just Commons, and Scott $2 a month to receive it. Right there is $3 billion that Wall Street probably never smelt.
Yep.
End of story. All right. So there you go. So anyway, coming back to the markets, yes, I believe we are going to go to 2023. Even if we pull back a bit, futures are down about 7.5 to 1980. That means they're down here, right there, right now. Okay. As I speak to you guys, 1980, right there, right at the bottom of the candle. We could slip here. Just emotional stuff, whatever. I would be a heavy buyer of the S&P calls at 1960, if not at 1956, okay? And believe me, these calls move. Now, when you buy these calls, just want to remind you guys one thing. Don't freak out. They'll move up and down very fast. Down, they'll move 4 points. Buy one, then add the second one, depending on what I'm putting out there, okay? And then,
Flo, just one question.
yes, of course.
Just say we do go to the 1960. Now, if you're buying calls, do you buy like 1965 or try buy like 1980, like a little bit further down to buy them cheap? What's better usually?
That's a very good question, Amar. Okay. The question is, I normally buy in the money. You know why?
Right. Okay.
Because I'm a little scaredy cat. So I said I'm going to pay up a little bit more for safety. But the guys who make the real big money, the real gamblers, they will buy the 1980s because they're predicting it's going to go there. But let me put it this way. I'm not that bullish. All right. So what happens is I want to protect my money. So I will buy either, if you notice my trades, and this is very important for anyone who's listening, is I'm going to buy either if it gets down to, let's say, 1950, right? 1960, right here. I will buy the 1960 in the money and 5 points out.
Okay.
It's going to cost me more, but I know I have the safety just in case things go wrong. All right?
Right.
And
But which one would make more money if you're buying the 1965
okay,
or if you're buying
okay,
or if you're buying the 1980s?
okay. So here's your question: if my thesis is correct, and it goes like this, right?
Right.
Then the ones you're buying the 1980s are going to make the most money because the acceleration is what creates the money. So even though you're in the money buying the more expensive ones at 1950 or 60, these will be percentage wise. This is the funny part about this business. They pay the gamblers more than they pay the people who are being safe.
I see.
I will make good money, but if it moves really fast and the market's up 200 points, right? Then the people buying out of the money, and it's the same thing with stocks, by the way. The people buying out of the money will get the bigger percentage returns.
I see.
But the question is, what if it slips down to 1940? Then
Yeah.
then the opposite will happen. You understand?
Right.
Yes.
Right.
So this is the way I do it. I will buy some out of the money. I'm not always going to post it like, oh, go buy out there, like, you know. The only ones I said, which did very well. Remember I said buy price line 1320, 1340?
Right.
Yeah. And then I said like buy some in the money. Those one went berserk. So the point is, it depends on what I'm thinking about that particular asset instrument, what it's going to do. That's what I'm saying. But if I'm going to play the market, I will buy. You can buy 5 to 10 points out. You know why? Because S&P 500 SPX generally moves 5 to 10 points anyway, right?
Right. Right.
Exactly. So buying in the money is a very safe thing. You can still make money, but they tend to move lesser than if you're buying 10 points out of the money and the market really takes off. Get it?
Right.
There you go. So that's your answer.
And
Yeah, go.
and Frank, as far as your timing, let's say tomorrow we open up, futures are down through the night, and we open up down at the 195s on the SPX. So you pick up the calls. Are you looking to pick them up for this Friday's expiration, or are you going to go out till next week?
So let's talk about that for a second, okay? One sec. So this is what I do. On that point, I rely on my charts big time. These channels that are drawn, these are intense, all right? These are very intense. My channels I drew one night, and I'll tell you, unbelievably accurate. Oops, sorry. Let me just try to get them in again. Let me do the 1 hour. The most sense. Okay. Okay. Can everyone see this?
Yeah.
Okay.
Yeah.
Like we say in New York, fuck the internals. All right. So we are going to just look straight out at the chart. So this was a robotic selling. Remember that day I wrote that report about robotic selling? This was the Glencore sell-off, right?
Yep.
And look what happened. These are so mechanical, it's not even funny. So here we are with these channels, and this is where we are right now. Okay. Notice what's going on right here. There's a little, let me just get closer. Okay. So on the channels, what we're seeing here, we fell out of the channel here. The high upper end of the Darvis. You have to take a couple of things into account. We are inside the lower channel. Everyone see that?
Mm-hmm.
Right. We are inside the lower channel. The lower channel is around 1981.62 on the E-minis. On the E-minis, all right? No, the S&P. Right now we are engaging. What are these two lines? Please tell me.
That's a 34 and a 50.
Okay, thank you. Mark, you got that?
Yes.
Okay, 34 and
Yep.
50. So what we're doing is, now I'm going to really zoom in. So we're engaging the 34 and the 50. I'll tell you one thing. I don't pick the 34 or the 50 because I like the colors and the colors I put and stuff, because these things are precious. So the bottom line is we have a lower Darvas box here at 1970, right? On the futures, right?
Yeah. Yep.
Right there. And the upper Darvas box right here at 1990, right?
Yeah.
Right. So this is what a battle is going on between the idiotic futures guys who are out there right now. I mean, the hardcore guys. So the bottom line is that they are going by price. They don't care about fundamentals. They don't care about what's going on, you know, anything like that. So at this point, as we enter the channel over 1981.62, right, on the E-minis, we're going to gravitate automatically towards 1990. There's no question about it. Now, your question, Casey, can you repeat that again?
Is as far as your time, your options expiration, you're going to buy
Yes.
like in the morning down. Are you going to buy this week's weeklies, or are you going to go out to next week
Okay.
on your calls if you do
Okay.
that?
Now, there are a couple of determinations that I make. Very, very important. It's a very good question in order to do that. I still believe that as we get into the calendar dates of next week, we're going to see some major turbulence, give or take plus minus 2 days from the 15th. All right?
The
October,
monthly options expiration.
not just that. Yes, that's one of them. And of course, the mutual fund fiscal year ending at the end of the year, correct?
Oh yeah, yeah.
Yes. So there's a couple of things that's going on that I have to adjust to all the time. I generally don't like bringing big positions into the market towards the middle of the month for a sole reason, because it's always the ugliest, right? So the point
Right.
is, I still think October is going to end up pretty damn strong, unless we have a slew of really terrible earnings from big, big, big firms. All right. So the point is, that's why I'm keeping things close to the vest. So I don't want to go out too much into next week because I don't know what's going to happen next week. Right? So October
Right.
2nd, which are expiring on Friday, are kind of like a crazy bet. But given the fact we have a strong week, I still think we're going to end up this week on a strong note. That's, you know, that's just a trader's determination. You get it? So if
Right.
I'm going to
Right.
buy this week, I don't go like crazy in there. So I'll buy a little bit and I'll just see if I can make the most out of it. So,
Sure.
so that's the answer to your question. Now, given the date factor that we're looking at, middle of October, always very tricky. Now, look at this picture here. We're down 8 points, and this is the E-mini, so it's real time. So at this point, if you look at this pattern here with two red candles, right? This candle can extend all the way down to 1969. That's another 10 S&P points down, right?
Right.
Right. So is it possible that we open tomorrow morning with 18 S&P points down? Absolutely. Which means they're going to engage this middle gray line, which is the middle of the acceleration bands. Remember, these two gray lines are acceleration bands, right?
Yeah.
So one of the things I need to tell you guys straight out, I'm going to wrap it up around 11 o'clock here, is that get used to like getting really familiar with lines. And it's been so easy for me to look at charts and stuff because I look at this, I'm like, this is not like a stranger to me, you know what I'm saying? And I mean, my son's a big car guy, so I always joke around, and we have a couple of nice cars. Is you sit in the middle of a car that I have no clue about. Sat in the middle of a car, I couldn't even pronounce the name. He knows. The Knitz. It's one of the world's like most expensive cars, right? And I couldn't even see the fucking dashboard because it was just like, what the hell is this? I'm that serious. I'm like, what the hell is this, right? And he's like, oh, this is this, this is this, this is this. It's one of his buddies had that. I mean, he's not even 17, but his compatriots in the car world, like, forget it. So I'm just like, Okay, that's great. So it's the same thing with charts. Like you got to get to know the dashboard, right? So,
Right.
so to me, these lines and these dashboards, maybe 5 years ago, would make no sense, but right now it makes a lot of sense. So that's why I spent so much time with you, all of you guys, to try to explain that. So let's get back to the dashboard here. Here are the parallel lines. This is the mid Bollinger. This gray line here, right?
Yep.
So that's 1969. The lower Bollinger right here also coincides with the acceleration. I'm sorry. The lower acceleration band coincides with the Bollinger Band. See the blue line here? Right. So there are two lines. And they all coincide somewhere around the 34-day moving average. See that?
Yeah.
Right. Now the 50-day moving average is right here. See this line here?
Yep.
That's not day
Right.
though. Oh, yeah. That's 4 hour.
This is on the 4 hour. So let me do the daily. Hold on. On the daily. Oops. On the daily, the line's good. So on the daily, this rising, this, by the way, this is the 34, this is the 50, and this skinny line here, purposely speaking, is the 5-day moving average, the trader's average, right? You see what I'm saying? Right there.
Mm-hmm.
Where does that coincide? 1970?
Yeah, 1970.
Thank you. So get friendly with these lines here, because if we break 1970, the big fast money, faster than me, believe me, they are going to basically sell the market all the way down to 1950 very, very quickly, because all of a sudden this line here I'm showing you, and put this on your screens too, the 5-day moving average, in this case, it's a 5-day moving average right there, which is 1970, 96, is all of a sudden going to turn around. Let me get the lines here. Is all of a sudden come under pressure and maybe starts to curve down. You get it? Once I start to see the 5-day moving average curving down on a short-term basis, for all of you short-term junkies that you are, okay? So I will have to warn you that we are coming down to 1950. You get it?
Right.
Yeah.
Right. And you believe me, in a few months' time, after we do a couple of these, you'll be like, man, this is easy. Yes, it's easy. It's hard because the volatility algos might not turn it down, might just move it up, right? Because of the bullishness that's in the market right now. You get it?
Yep.
So that's what I'm getting at. So right now, erasing all the drawings, this red candle is not necessarily that bad. It simply means we are creating a little consolidation flag. Get it?
Mm-hmm.
Or call it a consolidation box. And that consolidation box should be capped at around 1970. Period. Get it?
Yep.
That's it. If it breaks 1970, start getting a little worried for it to come down. Now, let's take a look at some stochastics very quickly. Stochastics are very hard to read these days. So here we are. Generally speaking, we would like it to be down here, right? In order to buy on the 1-hour charts. So if that's the case, then we should be at 1970 again. See it there? See it there? Let me get close. Right there. We need to be at the bottom of the Darvas at 1970 in order for the stows to come down here. Can it happen? Yes.
Sure.
Yeah, I sure can. But
I can buy
before,
morning.
but before it happens, remember, they're never going to make it easy. I don't mean that in a thing way. The reason why they're not going to make it easy, look at the 30-minute on the futures right now. What does it show you? It's
Oversold.
Thank you. So if we remain like this, down 8 points on the S&P, we're going to get a bounce right off the open. And that bounce might take us up to 1993. People are like, holy shit, man, I just shorted. I'm like, what am I going to do? But the point is, what does the hourly do? So it's a very hard read. That's all I'm saying. So you can be one way or the other. Generally speaking, unless we break this line here, 1973.6. Actually, let me put the S&P so you guys know where we get into real trouble. Wow, the S&P looks so damn good. Hold on one second. Look, let's look at the daily. Very overbought, no question about it. But overbought can stay overbought, okay? So that's not a problem. Unless this candle is snuffed out, we are in an uptrend. Do you understand what I'm saying, Amar?
Yes.
Right. If this candle gets snuffed out below 1975 or 1976, or below, of course not. I mean, let's say, let's be traders here. Let's not be long-term thinkers on this junction. So let's say we break below 1975. That's 20 S&P points, right?
Right.
What is 20 S&P points on the Dow, Amar? On the Dow Jones?
That's like maybe 150
Yes,
points.
you're correct, sir. 150 to 160 points, correct. So unless we break 160 points or so and lower, then and if we break 1963, then that means this uptrend is finished. Then something has majorly gone wrong. If this goes like this and breaks below this, you know something is going wrong. Get it?
Right.
That's it. So that's one thing you have to keep in mind. So let me go over a couple of quick stocks that I think are in a beautiful uptrend. Win has been a fantastic winner, and it's still going higher. I hate saying that to people who are out of it, or, you know, I'm almost out of it, but I always get it. So it's a very simple. Remember I said this was going to be a fantastic trade? You guys remember that?
Yeah.
It is a trade which is beyond fantastic. Looking at the channels, forget the internals, definitely overbought, no question. But you know, overbought by institutions, not by retail investors. Retail investors have no clue. They're like, when? What was that stock? Yeah, they all loved it when it was 160. Everyone, remember everyone used to trade that when there was 150, 160, right?
It was 240 at one point.
Oh man, Kerry, man, you just blew my mind. I even forgot it was up there, okay?
Yeah.
Yeah. I used to be an extreme win trader. And then everyone gave in, just like me, like an idiot. I never looked at it. But I did look at it here, so I take credit for it. So, yeah, I didn't look at it down at 51. But did I look at it like, you know, up in the mid-50s? Absolutely I did. Alerted everyone. So at this point, looking at pure technicals, not our emotions. I've been to Hong Kong, never been to Macau. My brother-in-law has taken the junket, you know, the ferry. You have these $3 million ferries that take people from Hong Kong to Macau, you know. Taken that because, you know, he's the one, he's like the ultimate, like, intelligent poker player. So bottom line is, first stop, 78. Remember, I kept on saying 78, right? The 50-day moving average. What are the chances that it's going to get to 78? Pretty damn good. Why? It's the 50-day moving average. Mark, you with me?
Yes.
Mark is a guy who will buy a big bunch of stock, which is great. That's the way to do it. So 78 is the thing. Does it mean it's going to not pull back to 70 before it does that? Absolutely. But look at the, one second. But look at this. Wow, 78 is right there. Now, once it crosses 78, that's the 50-day moving average. What do you think happens, guys?
Pull back.
Yes, a little pullback, but what do you think happens in the psychology of the fund managers and people out there?
They get more bullish on it.
Thank you. That's exactly the way they work. CNBC says, oh, look at Wynn. Steve Wynn is back in the picture. You know, He's not smashing Picassos anymore. He's actually, you know, like, wow, bullshit stuff. No, seriously, that's how these idiots do it, okay? So you're looking at $90, guys. $90. Because this is the pattern, right? By now you know because you've been working with me so closely, right?
Yeah.
By now you guys are starting to believe that patterns work, yes?
Correct.
I believe and I still don't always follow it, but believe me, patterns do work. This is the pattern, my friends, right there. At 90, it hits a big frigging roadblock. But what's the roadblock between 72 and 90? None. Do you see any space here? This was the space it dropped. It's called a vacuum. Get it?
Yep.
As skeptics come in, yes, it can come down to about 70 or 69. What does it matter? It's going to get to 90 in anticipation of better earnings and all kinds of good stuff. Don't ask me. Technicals in general precede fundamentals. You understand what that means?
Hmm.
The fundamental news will come out. This is the fundamental news. The Chinese guys who basically got scared shit because of the anti-corruption drive in China. You know what that means, right? They were clamping down on military generals spending $20,000 on cognacs and I'm not going to mention the girls, but anyway, and all kinds of shit, right? And this new premier is a very solid guy. He's a very righteous guy in his own way. I do admire him for what he's doing. He basically clamped down hard. All of a sudden, Chinese consumer spending just collapsed, right? I mean, not consumer spending, high-level consumer spending collapsed, right?
Okay. Yeah.
Right. So that hit Macau in a big way because that's where the big the VIP spenders go, right?
Right.
Exactly. That's why Macau got hit. China realized not a good thing. So they might even support Macau. Remember, Macau is nothing but Vegas in its old days, except they're richer. It's the size of Rhode Island. And if anyone doesn't know Rhode Island, please Google it. I know Brown University, and in fact, actually, I don't want my son to go there because it's a bunch of kids in a very small place,
And
very smart and doing a lot of maybe pot, and we're not into drugs,
they
okay?
have beards like Jack Dorsey.
Yeah, exactly. But Brown is an Ivy League university. You know that what I'm saying, right?
Yeah. Yeah.
Yeah, exactly. So that's what I'm saying, you know. So the point is, here we go. Channel, 91. It's going to get to
Yeah.
91. Mark, you hearing this?
Yes. You know, actually, I just got out today from it at 72.
You got what?
I actually sold it today at 72, but I'll probably go back in there as soon as it comes down a little bit, maybe like a few bucks.
Yeah, you're perfect. You're good, man. You're doing it the right way. That's perfect. And when it does go to 90, you're gonna pay me a 1,000 a month for my service, okay? So that's
For sure.
yeah, for
Yes.
sure. Okay, you guys heard it.
Oh, that's recorded.
It's on a recorded line. All right.
Yeah.
So that one I like a lot. Now let's take a look at Twitter. No, you did the smart thing. So Twitter is also fantastic. Twitter's upper Darvis is 37. Twitter's going to 37. Like an idiot, I almost sold like half of my Twitter calls. I had a lot of them. But thank God I sold some and I didn't take out the majority. And they went berserk. Look at this pattern. Let's say you knew nothing about Twitter. This is the way somebody taught me a long time ago. Okay, guys? By the way, this is the best session you guys are having for free, man. Seriously, I don't know. I just have a good time because I'm having a good time too because I'm really seeing a lot of good stuff. So look at this here. The 50-day on Twitter will be engaged at $38.
Yeah.
That's $11 from here. I'm sorry, 30 to 38. Let's say $8 from here. So 8 divided by 30 is 27%. Do you know where your long dated calls for November, if you buy it, or end of October are going to be? They're going to be up almost 2,000%.
Good.
All right. End of story. So that's what I'm getting at, guys. You know, the thing that keeps us from doing these massive trades, well, I stick with them, at least some of them, is because we are idiots. We're always scared of the shit that the market throws at us. We're listening to stock twits. It's on a recorded line. We're listening to CNBC, and we're listening to very smart guys telling us we're going down a black hole we'll never come out of. Now, what does Twitter give a shit about, given the scenario that I just presented to you guys 20 minutes ago, right? $1 from you guys and $10 from me is another $3 billion in their coffer, right?
Right.
So what does it frigging care what happens in China? That's what I'm getting at. So I'm going to leave it at that because too is like normal stuff, and I need you guys to do one thing, and then I'm saying this in a public recorded thing. Please, for God's sakes, go out there, because this is my only marketing that I do. Put in like 2 words on what your experience was tonight on an impromptu thing. Put it on the testimonials, shoot it out in stock tweets. That's all I care about, okay? Because this recording will go public, but I want people to learn a little bit what I taught you guys. And, you know, if you feel like, please do that, all right?
Great.
All right, so that's pretty much it. So you got 2 major stocks in play, got some technicals that we are keeping a very close eye on, and you got a guy like me who's telling you overall during the day what might be happening or not. But in general, we're not going to the moon. I repeat, we're not going to the moon, but the last picture that I'll show you, and that's why I stuck to Think or Swim tonight. The last picture I'll show you is a picture of the Dow Jones Industrial Average, the S&P 500 at since last October's low, which we never got to, by the way. Minimum, we're engaging the 50-week moving average right here, which is around 2060. And on the daily, we're engaging the 50, which we are right now. It's possible we get up to about 2020, which is the upper end of the Bollinger. Just see how the Bollinger is curving up, right? Look how the Bollinger is curving up, right?
Mm-hmm.
Acceleration band, that's the max move we're going to make. So if that's the case, we got another 160 points on a weekly basis. We are talking about higher levels. On a weekly basis, going into November maybe, we're looking at about 2070. Now, or pattern fill here. Whatever the case, this is definitively a bullish pattern, regardless of what our feelings are, in which case a majority of us are bearish. And right there. This is the point where we decide where the markets are going to go. Get it?
Mm-hmm.
And if that's the weekly case, we're talking about 67 plus 5, 72 S&P points times 8. We're talking about 576 points that we have to contend with. And if we miss most of it, then we are truly idiots. Get it? And
Yes.
the most important level we have to cross is right here. This very dangerous reversal tail, which is somewhere around 2020, right?
Yeah.
Let me just show this. Let me draw a price level. Let me make it very thick so we know what we're talking about for right there. And that coincides with the upper end of the Bollinger and the acceleration band right on the daily. So 2022. So that's about 27 points from here, right?
Mm-hmm.
27 times 8 or 7 is about 200 points from here. Maximum move before we have a pullback and decide whether whether the bears are going to take over or whether the bulls are going to take over. Get it?
Got it.
And that's it. Good night, guys. But please take a minute to put that testimonial about your feedback from tonight's sessions. Do it by tomorrow, whatever. and throw a shout out on StockTwits, because that's our, I want people to know, and that's it, guys. I'm glad that you guys were here, and Amar, Kerry, and Scott, thank you.
Thank you so much, Clue. Thank you.
And those two stocks have the biggest potential, in my opinion, amongst a couple of others. But those two stocks, the biggest potential to move, because they're way away from the 52-week highs, and they're rising from the ashes. Get it?
Got it.
That's it.
Yes.
Yeah. Don't. I love chasing stocks that are moving higher and higher, but I don't feel comfortable doing that. But that's what the market does. But you're talking about two deadbeat stocks that no one liked, and we called it pretty much at the bottom. And let's do what we need to do, right?
Perfect.
All right, guys. Enjoy. Please put those testimonials and the shout outs by tomorrow. And thank you.
Thank you so much, Clue. Good night.
Anytime.
Good night, everyone.
All the best.
Good night.
Okay. Bye-bye.
Thanks, Frank.